In this segment, I'd like to talk about Chapter 7 bankruptcy and what Chapter 7 bankruptcy means and whether or not sometimes you qualify for it and sometimes you don't. Most people, believe it or not, qualify for Chapter 7 bankruptcy. Most people either don't make enough money, and there is a money threshold, or they have so much other debt, for example, mortgage payments, car loans, that they do qualify for Chapter 7 bankruptcy. And a lot of times, the threshold question of whether or not you qualify isn't simple. It's not just, yes, you make this amount of money, or no, you don't make that amount of money. When you're thinking about bankruptcy, you really have to think about bankruptcy in terms of a tax return. And how do we file a tax return? Well, some expenses on a tax return, we get 100% deduction. And what does that mean? That means, for example, when you have a child, you get a child credit. That's 100%. Other expenses on a tax return, you get 0% or a portion. Now, what does that mean? Well, for example, when you file your tax return, and if you are self-employed or if you have an automobile expense, you get to take so many cents per mile, and that adjusts every year. It used to be 30 cents, 50 cents, but the fact is the government lets you take an expense for that portion of use that you use it for your employment or work. Well, bankruptcy is very much the same way. And when you're considering how you're going to qualify or what you're going to qualify for, when you're filing for bankruptcy and seeking that type of relief, you definitely need to seek a person who understands what deductions are 100% deductions and what deductions are no deduction or a percentage. Because what comes out of your paycheck might not always mean that's exactly the deduction that you receive when you file for bankruptcy. And that's where a lot of people get hung up. And I think that's where a lot of clients, attorneys, and other people who have some understanding of bankruptcy but really don't have a firm grasp get hung up. And what do I mean? I mean, they automatically think that you might not qualify. Now, when we're talking about Chapter 7 bankruptcy and we're talking about your qualification, I'm not going to draw a bright line rule because of that. Certainly there are certain cases, for example, if you just receive Social Security income, or if your employment pays you not a very good wage, a low income wage, or if a family member is ill and out of work, where your income again is reduced. Sometimes those can be bright line. But for most people, most average family households where two people work, there's no clear answer. And the answer really comes down to being able to determine the income and the appropriate expenses that you're allowed to deduct so that you can qualify or not qualify. Now, there are other options if you don't qualify for a Chapter 7, and we'll talk about that later. But for now, I just wanted to give you a brief introduction of how bankruptcy and the qualification process really works.